If you can cut out all of the big losses, you've taken one huge step towards profitability. What's up guys, Zen here with Zen Trading Academy. Welcome back to another video. Today we're going to touch on a very passionate topic of mine because I was once like you. I was a learning trader. So I had a strategy. I would get some wins, I would get some losses, but ultimately at the end of the month, I would end up negative. Then I came across this concept and it changed my trading forever. It was like a switch, like in my head, it just went like, once I fully understood this concept and started to apply it to my trades, I started to see positive results. I believe that this is the missing puzzle for all of you struggling traders who have the strategy but just cannot seem to get the results. And this concept is risk management. Risk management will take your trading from just being a game to become a business. And if you don't believe me, I think this 10-minute video will change your trading career forever. And in order for me to share more with you, I need your help to smash the like button and subscribe if you're new. I'm going to share with you the most important rule in trading, and all I need you to do is help me hit the like button, and I really appreciate it. Now, let's head into the video. So, let's start by talking about losing in trading, because most of the successful traders are not extremely good winners, they are extremely good losers. Losing is part of the game, but many traders get trapped by the idea of making huge wins without thinking of the potential risk behind. So you see a lot of big wins posted online, but what you don't see is all the big losses that come from these plays as well. So if you're a new trader or if you're a learning trader and you haven't thought about losing, you're likely not profitable yet. Now tell me, how many of you are still holding a position from months ago, right? You took a trade thinking it will go higher, but then it started to drop. And at this point, you're like, it's dropped so much, I might as well hold it. Now you're a long-term investor, right? The famous quote of all traders who fail become a long-term investor. And all you're waiting for is for the stock to come back to break even or even slightly profitable, and then you're planning to sell it off. Now this is the juncture where traders either venture into long-term investing or they become profitable traders. So how does risk management help you? Even if you're not a trader right now, but you're interested to join, when you see those people post huge profits, you have to think, what could they have lost in this trade? Because if you can make 1,000 per trade, but you lose 2,000 on a similar trade, how are you going to make money in the long run? What's the point of making a huge win if your next loss is going to sweep it all under the carpet and put you negative, right? So always think about the losing side as well. Think of how much you could potentially lose if you take a trade like this. So the first concept you need to learn is find a strategy that makes more than it loses. It sounds very straightforward, but the technical term for this is risk to reward ratio. So the risk to reward ratio is basically how much your strategy says it's willing to risk in order to make a certain amount. So for example, if you're risking 1,000 ringgit to make 3,000 ringgit, your risk to reward ratio will be 3:1. Obviously, higher risk to reward is better because who doesn't want to make 10 times the amount that they risk, right? But there is a fine balance between risk reward ratio and win rate. Depending on the strategy, the higher the risk reward, generally you will have a lower win rate. So do your back testing to figure out what is the most ideal risk reward ratio for your strategy. So once you figure out the risk reward to your strategy, we go to the second most important concept, which is controlling the size of your loss. Now, how do we do that? The simplest way to control how much you're willing to lose is by controlling how many shares you buy in. And this is contributed to 3 different factors, which is how much capital you have, how much you're willing to lose, and how large is your stop loss. Now, the rule of thumb is that you never risk more than 1 to 3% of your max capital per single trade, okay? But most traders will always try and buy the maximum number of shares that they can into a stock when they try to enter a trade. Because why not, right? You buy more shares means you can make more money. Wrong. How many times have I said that more shares equals more potential losses? If you're going all in every single trade, all it takes is one big mistake for you to wipe your entire account and you're out of the game. And that is not sustainable. We want to have a strategy that allows us to take a few losses in a row and it still doesn't affect how we trade. And that is where most traders will fail. They will make one big mistake all in and then they blame the market instead of their own stupid decisions. So if you don't want to be one of those stupid traders, use this method to protect your capital while maximizing your profits. It's very simple. So the first step is to figure out how much you are willing to lose based on your capital. So let's call this R. Let's say you're playing with a 10,000 ringgit account, and as a safe amount to risk, you risk 1% of your capital. That means every trade, your max loss will be RM100. And second, figure out how much your stop loss is. Let's say you want to trade HLT at 1 ringgit and 2 cents and your stop loss is 1 ringgit, okay? That means your stop loss right now is 2 cents. Now you take how much you're willing to risk, divide it by the size of your stop loss, and you will get the total number of shares that you can buy. So in this case, the maximum amount of shares you should buy in is 5,000 shares, or basically 50 lots. And this will cost you about 5,100 ringgit even though your capital is 10,000 ringgit. Now remember the logic here, you're trying to control how much you're willing to lose in every trade. So by only buying 5,000 shares or less and stopping out at 1 ringgit for a 2 cent stop loss, your max loss will be 100 ringgit, which is within the 1% max loss that you set for your own capital. So why do we want to control our losses? In an earlier video, I mentioned how most people are afraid of the uncertainty in trading. So the way we can add some sort of certainty into our strategy is by statistics and controlling our losses. Because if you control how much you buy into a stock for a trade, you know for sure how much you are going to lose. Imagine making 200 every single trade, but on a loss you lose 500, you lose 100, you lose 1000. At the end of the day, you will not be profitable because your losses will be bigger than your wins. So by controlling your losses, by keeping your losses small and respecting your stop loss, you can control how much you lose, and that is the reason why I became a profitable trader. The fact that I can control how much I lose while letting my winners run basically meant that all of my losses stayed small while my wins can range from small wins to big wins. So there's only 5 outcomes for each trade. A big win, a small win, break even, small loss, and big losses. If you can cut out all of the big losses, you've taken one huge step towards profitability. So keep it disciplined, maintain your share size, and use the formula I provided to calculate your maximum buy-in size. So I hope you enjoyed this quick little video. I feel like this is the most important video you watch on this channel, so make sure you watch it again until you get clear. Let me know if you have any questions in the comments below and I'll make sure to answer them as soon as possible. If you found this video helpful, I would appreciate if you could smash the like button. It really helps this channel, and I hope you have a great day. Take care.